Welcome to the Season 4 of the India Energy Hour podcast. This podcast explores the most pressing hurdles and promising opportunities of India's energy transition through an in-depth discussion on policies, financial markets, social movements and science. Your hosts for this episode are Shreya J., Delhi-based energy and climate journalist, and Dr. Sandeep Pai, Washington-based energy transition researcher and author. The show is produced by 101 Reporters, a pan-India network of grassroots reporters that produces original stories from rural India. Season 4 of the India Energy Hour podcast is here. To kickstart the season, the hosts are here to give a primer on what all to expect in India's journey towards energy transition. It is the year of general elections in India, and a lot of policies and political decisions hinge on that. But there is other exciting stuff too. From India's maiden critical mineral auction to more engagement on just transition, this could be the year India walks the talk on energy transition. Tune in to get a 360-degree view of India's energy and climate action landscape as we step into the new year.
Vibhuti, first of all, welcome to the Indian Energy Hour podcast. This is our season 4, so I'm really excited. And what a great way to start the podcast with you. I mean, you've been such an influential scholar in India on topics of energy and climate, and been such an instrumental voice. So, really welcome to you on the podcast.
Thank you, Sandeep, for having me here. I'm really looking forward to our discussion today and talk about some of the very pertinent issues that are impacted not only India but globally as well.
Wonderful. So, in this podcast, you might have heard past episodes. We start with that person and their story and their journey.
Sure.
So, why don't we start with like where you were born? How did you what did you study? And then how did you get into energy space? And then also in finance space, like how did this become your topic of life, if I can call that?
Great. Well, to begin with, I am a true Delhi girl. I've been born and brought up here. I did my master's in economics from Delhi School of Economics. Also, I did graduation from Hansraj College. My undergrad was also in economics. Ever since then, I passed out. Landed at NCAR, which is the National Council of Applied Economic Research. There I did forecasting for state gross domestic product. So after spending 10 months there, I started working with TERI, the Energy Resource Institute, in the energy domain from April 2004. And I would say that was the start of my work on energy, but gradually climate related issues. So way back then, it was quite an interesting time where Electricity Act 2003 was notified and kind of which transformed the energy sector completely. So I would say I've witnessed India's electricity growth story where the country was reeling under huge energy deficit. There were power shortages for long, even in urban areas. I have personally it's funny, but I have also personally studied, sitting in my balcony, using the street lights because there was no light for like 2 days in a row. And we had exams. So I was like, what do I do? We had kerosene based lamps as well at times to be used for studies, but that was the only limited use we did, not for any other purposes. So, yeah, our generation has gone through that as well. So it's not something which our parents or our forefathers had witnessed to. So we were also witnessed huge energy shortages. And that was something which really disturbed me a lot. And I'm glad that I could be part of that journey where, we transformed. And thanks to the government and the policymakers with this landmark Electricity Act 2003, We saw private sector participation in generation, market reforms like setting up of power exchange that changed the entire dynamics, I would say. So that was one of the big landmark change in the Indian history of electricity growth, how markets played a big role. So, however, we know that this growth story during my initial career was being led by thermal capacity, and with increasing share of fossil fuel in the capacity as well as generation mix, it started having a lot of impact on climate. So, in January 2015, I shifted from mainstream consulting with the like of Mercados and then ICF and then to International Institute for Sustainable Development in 2015. And that is where my work on, fossil fuel subsidy reforms, public sector investment in renewable energy started. So from working in energy to mainstreaming climate, as part of the journey of the energy sector reform started for me. Again, I see my shift in my career to some of these landmarks announcements. Again, 2015, when I shifted to IIST, that was a very pivotal year where a lot of countries, including India, signed Paris Agreement, and India as a country announced big renewable energy targets. So I would say, however, financing was becoming a big bottleneck when India announced these targets. And that's something as part of subsidy reforms or public sector investment that I was investigating at ISD. But then I wanted finance to become like a mainstream and I started splitting my time between the two organizations, IISD, but also started working with Institute for Energy Economics and Financial Analysis called IEFA. So for accelerating more investment, as I said, we need to de-risk policy, off-taker risk, market risk. And 2020 onwards, I would say I started working full-time with IFA and continue my role with IISD as strategic advisor. So yeah, that's in a nutshell my journey in this space so far.
So, do you like the regulatory policy side, or do you like the finance side more? Or I mean, it's kind of sometimes they're you can't separate them, but like which is the more exciting side for you?
Exciting side is finance because that was something new. While I had been looking at the policy and regulatory side of things, reform from 2003 onwards, 2004 onwards, but I recognize that unless the money is coming in, but for that money to come in, policy and regulation plays a big role. So we need to be mindful of that. That unless we have the policy certainty, the conducive environment that can bring in more investment, so that definitely plays a key role. But at the same time, money will play a big role for us to achieve those big targets, and there are big gaps there, and that's what started interesting me more.
Great. That's really great, Vibhuti. Now let's get to talk about the topic, right? Like, I mean, this year's a election year, um, but this election, um, obviously, current government has a lot of policies on renewables, and they have policies on fossil fuels, etc. And then there is this election coming up. So, in this year of elections, and change in in whatever way, like whether the government changes or new government comes or the current government changes, but the ministries, the bureaucrats, there may be a lot of reshuffle there. So in terms of all that, what are some of the key energy and climate issues that you think one should watch for in 2024, this year?
2024 is definitely a very interesting year where so many countries are going into elections. So um, I would say it's not only the how India elections will play a big role in terms of deciding the future course of action by the government, but also globally, the election results, the kind of individuals or the parties that are gonna rule those states, countries will also determine how India position itself. While we have seen as recently as yesterday, India signed uh, economic cooperation between India and the Middle East. So our ties with the Middle East is growing stronger, but also other countries, say for example, especially US, the kind of track they are going to follow, because we did see impact of Inflation Reduction Act and its emphasis on clean energy in India. So while there could be more emphasis on sharing of technologies between different countries, because there's a big push from US into development of R&D and setting up a big large scale capacity even in US. But negatively, it would impact the availability of finance. So there could be it will have a mixed kind of an impact on India's energy transition story. But at the same time, if we get a party which is against climate, things could, we would be redrawing the board again. So that's something which needs to be mindful of, and it's all very very dynamic at this stage. So yeah, that's something I would say in 2024, with so many countries going into election, that could really shape up how the world or globally things are being perceived and the kind of actions that we are going to see on ground. But I believe the G20 and the COP will keep continuing to play that role in pushing a common agenda. So, yeah, barring that, I would say specific to the Indian energy transition story, I would say how the Indian carbon market and green credit program will shape up is something I'm looking forward to, because India needs both a mix of carbon tax as well as market instruments like carbon market to promote shift towards cleaner energy. A carbon market, while provide a platform for buying and selling of carbon credits, so often in the form of carbon allowances or offsets, uh, with the goal of incentivizing emission reduction. So while India did not have like a formal functioning carbon market, but we still had instruments like PAT, which is perform, achieve, and trade for industries as well as buildings, but renewable energy certificates for the power sector. So, this particular carbon trading scheme, which was announced by the Ministry of Power and the Bureau of Energy Efficiency, will push the carbon trading scheme in India and will lead to positive outcomes, is something that I'm really looking forward to. And in terms of other thing, I think also, again, since it's a global market, how CBAM, which is the Carbon Border Adjustment Mechanism in Europe, will also have a bearing on the Indian industry. So we have seen both the industrial minister, Mr. Piyush Goyal, and the finance minister, Ms. Sitaraman, kind of representing the concerns from the Indian industry, how they would be negatively impacted without getting any support from the global north in terms of investing in clean technologies. On the other hand, um, uh, like penalizing some of the industries in the global south. So there is unfair kind of impact that will be there on the stakeholders in the global south. So I think that's something which India is trying to represent some concern, because they would need additional support. And if there is a way that the global north can provide that additional support for them to for the industries there, so I think that's something very very important to look at. Apart from that, I just wanted to highlight that 2023 was not a very good year for India. While we did added about 13 gigawatt of renewable energy capacity, but in 2022 we added about 16 gigawatt. And if we are really serious about 2030 goals, what India needs to do is add 25 to 30 gigawatt of renewable energy at least, or maybe a little higher if we really also have to start looking at the green hydrogen goals. So policy certainty needs to be there. We need to address the off-taker risk. So government has been coming up with favorable policies, whether for the off-taker risk as well. But still, I think there are concerns there because last year we did not see the kind of RE deployment. While there is a lot of capacity that has been tendered out now, but yeah, the deployment has been a bit slow in that front.
Right. So fantastic, all really interesting, both geopolitical points, but also some points about India. Let's double down on this 2030 target. I mean, you really nicely articulated that, the way India is adding, although very good, is not enough to meet that 2030 target because if I remember correctly, or if I'm right, I think India needs to add something like 40 gigawatts a year
Yeah,
to meet that.
35 to 40.
So, like, what, 35 to 40. So, if that's the case, and we are at, like, say, 15 plus minus, um, I mean, how do we move from this 15 every year to 35? It's almost more than double. So, what are, like, a few key things that India should focus on to really increase this addition, meet that target of 30-35 a year?
I think what is critical for RE deployment is the commercial viability of energy storage. Because the way the tenders are being rolled out now, we don't have any plain vanilla solar or wind contracts, but it is more of an RTC product, or flexible demand resource is what we need. So we need more and more storage capacity being deployed, whether it's pumped hydro, but also battery storage. Again, government has come up with big tenders, and we will see more capacity being deployed. But so far, it's been very, very limited. So that will be the game changer for us to deploy, and for distribution companies, or even for open access consumers, the CNI sector, which is the commercial and industrial sector, to completely shift away from relying on grid based power, which was largely fossil fuel fed, to relying on renewable energy, but they need a reliable source of supply. So storage will be a game changer, I would say. Then on the other hand, for other sectors to decarbonize, bringing the electrolyzer cost and green hydrogen production cost will be the big driver. I think the Indian government is betting big on CCS, which is carbon capture and storage, but the cost curve has not declined in the last so many years, though the technology existed for long. And in the best of the cases, we have seen that they can reduce carbon emissions by 80% and not 90-95% as claimed by many. So the time is ticking, and we should not look at transitory fuels but leapfrog into clean energy deployment. So I would say whether it's carbon emission from coal or methane emissions from gas or coal mining, India should be looking at presenting itself the global leader in adoption of clean energy technology. We have seen India taking like big steps, whether it was International Solar Alliance or Global Biofuel Alliance, which was formed last year as part of the G20. So there is a big focus on putting up clean energy, but at the same time, there are some mixed signals coming as well from coming up with more thermal based capacity. So at IFA, we have been looking at, there are so many idle capacities that are kind of under the stress asset resolution. So why not use those newly built and further kind of close down your inefficient old plants, and use that capacity to meet the demand in the interim, till the time we start building more and more renewable energy. 13 gigawatt or 15 gigawatt is not a small number, but the way the Indian economy is experiencing big electricity demand growth, as well as other sectors, if we need to decarbonize, we really need to set now big capacities. We really need to double or triple our renewable energy installation. So I think that will be key. And as I said in the beginning, the carbon markets or other market reforms, whether it is in the form of market coupling or a time of day pricing or pooling of all the resources, all of these market reforms are under pilot stage. I think the time is ticking, so we really need to initiate these market reforms for more and more RE penetration. And lastly, I would say expansion and modernization of the grid would be key for RE deployment as well. And then securing supply chains for India to deploy such big capacities of renewable energy. I think India does not possess all these minerals for that large scale deployment. So, securing supply chains would also be a critical piece in the whole puzzle. And that's something which India is now mindful of. And it's setting up different partnership. We have like critical mineral investment partnership between India and Australia and US separately. So there are bilateral cooperations happening between the countries, and I think that will be key.
Right. I wonder if you have any thoughts on, as India's 2030 target for renewables, if you have any thoughts on the role of decentralized renewables. I mean, I think what we're talking about here, 35, 40 gigawatts, are mostly, uh, we are really talking about large scale wind and solar. But like, what are your thoughts on India's decentralized renewable story?
Um, in the decentralized renewable energy space, the solar rooftop in particular, India did not make good progress. So India had a target of 40 gigawatt of solar rooftop by 2022, but what we achieved at best was 11 gigawatt. And according to industry's estimates, this year we might witness a surge, and we could achieve around 4 gigawatt of solar rooftop, which is very, very promising. The recent emphasis, I mean, this was also emphasized by the Prime Minister, and in his recent speech, like 2 weeks back, he announced another scheme, Suryodaya, which will give a big push, and having big rescos deploying this will address a lot of risk, whether it's having collaterals, their ability to raise finance, or aggregating demand by bringing in lot many players together and putting up that capacity. So I think uh, things should start um favoring the DRE, but solar irrigation is still, India had big plans. So we did see limited success, but it has not really penetrated in the way that, again, the government really envisaged in the beginning, because there are, rather than having individual solar pumps, I think what is working better is having, kind of mini grids or grids in smaller communities to serve that irrigation demand. But yeah, so there are still different states having adopted different models, and the success is varying depending upon the state, what kind of policies they are coming up with. So I think that's on the DRE. But as I said, with the government push of having big players as part of the RESCO model, the likes of NTPC, NHPC, and the other lending commitment from PFC, the Power Finance Corporation, may start turning things around for DRE. And I think it's also very critical given the land constraint that India is facing, especially with respect to, how do we use the limited land for building up big utility scale projects, or the DRE, the decentralized renewable energy. While the focus has been till date more on building up big utility scale projects, that has to continue. But I think DRE will also play a big role in meeting India's energy demand. And I think that's something which the government is gradually recognizing. And that's why there is a big push now for setting up DRE, especially the solar rooftop.
Great. Yeah, I just want to pivot a little bit to your special, the topic that you work on day in and day out, which is finance. So, one of the things that I would love to understand is like how is RE projects, RE large scale RE financed in India? What is working, whether it's domestic finance or international private finance or other types of finance. So if you can paint a picture of or provide a landscape view of financing of RE in India and whether there are any challenges and how to overcome. But I can come to how to overcome in my second part. But let's focus on the landscape and the challenge.
Sure. I would, as I mentioned, 2023 was not a very good year in terms of the RE deployment slowed down. So we had about 13 gigawatt compared to 16 gigawatt in 2022. Similarly, in terms of financing, India attracted about 12.7 billion US dollars of investment in 2023 in RE alone, which is 16% lower than the 2022 for the same period. And the investments were more in the form of equity infusion from sovereign wealth funds, infrastructure investment, banks, and intermediate capital group, venture capitalists. And there were a lot of acquisitions as well. So they were in RE, a lot of project change hands. And I think that's how refinancing has been happening in RE space. We also had Indian banks like State Bank of India, who have shifted focus and are funding a lot many RE projects as well. So we also had the likes of Brookfield, Barclays that have infused debt capital. So yeah, these were the form of capitals inflow that we saw in India, but also there was huge inflow of capital by some of the developers raising money through the sustainable linked bonds or green bonds. And even India as a country, the sovereign bond that it raised, some of it would be used for RE deployment apart from the other uses that the government identified. But if you look at the requirements, so achieving India's net zero goal requires investments in the range of 7.2 trillion US dollars to 12.1 trillion dollars by 2050. And if you look at the 2030 targets alone, India would need additional money of 400 to 500 billion US dollars. So at least 200 billion US dollars of investment is required on an annual basis. But in a good year, what we have seen, we have achieved about 45 to 50 billion US dollars of investment in the whole ecosystem basis. So we need is tripling of installation, but also tripling of finance. So I think that's where the issue is. How do we get more and more finance? So while there is no dearth of capital available, but there is still higher risk with new technologies. So whether it's offshore wind, battery storage, green hydrogen. So there are some perceived technology risk, and given that the upfront capital requirements are huge, so that's where the problem is. And how do we navigate the space by providing some kind of co-lending facilities or some support from the likes of philanthropies or MDBs, the World Bank, the ADBs, and the other MDBs through blended finance mechanism or through viability gap funding that we are seeing that the government is providing, especially for green hydrogen or electrolyzer manufacturing, is will be key. Um, um, so yeah, there is a lot of capital, but how do we unlock a lot of private capital, especially for the new technologies, is something which India really needs to work on. So, yeah.
So is the thinking? I'm just kind of also trying to simplify by asking this question for our audience. Is the thinking is when we talk about blended finance or viability gap finance, is the thinking that the say the philanthropy or the public sector or governments, they come in, they de-risk some of the projects, they demonstrate that this stuff works, and then they show it to the private sector. Can you kind of explain how that, more viable type of how do you bring private sector? Like, how do you de-risk it for private sector, large commercial capital? What would be the role of some of these players before private sector will be like, okay, I'm ready to come in. This sounds good.
Yeah. So, um, given that the risk associated with some of these new technologies are higher, or even for, I would say, segment of players like MSME, where again the risk attached is higher. So the cost of financing is very, very high. And that's where the likes, I mean, the platforms or the instruments like blended finance can unlock a lot of private capital if the government provides concessional money, and then you have private capital giving, finance at the market rate. And if you pool in that bit of capital, the cost of financing reduces, and that makes or that improves the commercial viability of those projects. And once we've set up a few projects with and established the commercial viability, the way we have seen for solar and wind, how the price curves have gone down with economies of scale. So that's the kind of role a blended finance instrument can play. And after the initial support from different organizations, including government, public sector banks, and the likes of MDBs and philanthropies to provide that concessional capital, there'll be a huge unlocking of private capital, and the commercial viability of projects will drastically improve.
Right? And how much a country like India gets or is able to raise financing for RE projects are linked to policy changes or continuation of policies. Is that how does that add to the uncertainty of deployment of certain technologies? Like, say, let's take the example of, let's say, green hydrogen. So what I mean is, what is the policy of India or states in India, or policy of the state, um, and the incentives around that? How much is that linked to how much a developer can raise money in the international market? Uh, I mean, is it like really like a one-to-one link, or is it a little bit less? Like, I don't know if you have thought about the intersection of policy, finance, and deployment.
It is one of the key driver. Having the right policies and the certainty, because we have seen government backtracking some of the policy decisions. So, which initially they came up with favorable policies. Say, for example, I'm just taking in the case of DRE, the net metering policy, which allowed consumers of till 1 megawatt to get the benefits of net metering. But then 2 years ago, government came with the policy change, and they tried to reduce it to 10 kilowatt. They felt that a consumer with 1 megawatt is a big player, and they don't need that kind of support. But there was a lot of backlash, and that really slowed down the development of solar rooftop. And after so much of representation from the different stakeholders, thankfully that limit got increased to 100 kilowatt. But still, electricity being a concurrent subject, different states have different limits, so it's not uniform. So some states are more progressive, and they give a lot more benefits in terms of net metering to 100 kilowatt consumers. But there are states which stuck with this 10 kilowatt limit as well. Um, and that drives your investments. So a lot of backlash happened when such policy, even for BCD and ALMM, industry really had to represent, like while everybody is interested to have more and more domestic manufacturing, but if the targets are huge, if we really have to achieve 35 to 40 gigawatt of annual RE deployment, we don't have the capacity, the domestic manufacturing to the order of 35, 40 gigawatt. We'll achieve it over time. So that how that progression happens without having a cost of not meeting your RE targets was something which the government then had to see. So there was some delay in implementation, but finally it was rolled out. But thankfully, the prices in the international market for solar modules fell. And even now, some of the companies are importing. But at the same time, then you had this huge requirement of ALMM, approved list of module manufacturers, which again have been kind of deferred till April 2024. So a lot of players were finding it very difficult to import modules and cells and deploy RE because your domestic manufacturing capacity was not meeting the demand we had. So so definitely how the investment will flow, policy has a big role to play.
Right. I mean, you touched upon two topics which I want to double click. One is this tension between states and center. And the second is, in some ways, for a country like India, which is deploying 15, I'm just going to pick that number, 15 gigawatts, and want to deploy 35, which is more than double, um, you need panels from everywhere, whether it's produced domestically or whether it's produced. But if and because the production costs are so low in China and in other Southeast Asian countries, like what ends up happening is that there's a lot of deployment, there's a lot of imported panels. But at the same time, if you continue to do that, like your domestic industry is not thriving.
Yeah.
So there is this dual tension between center state and manufacturing versus production. I don't know if there is, in your deeper thinking, have you thought about like what are some things, mechanisms by which these two like two by two matrix can be kind of solved or not?
I think the way the government has dealt with it is that for government tenders, they are saying you have to necessarily, if you want government subsidies, you have to have um like modules sourced from domestic manufacturers. But if it's an open access or if it's captive consumption, you are free to import and use any of the modules or other supply chain material. So government did. I mean, that's a very recent kind of a breakthrough that finally the players had because definitely, there's always this chicken and egg situation. You want to promote your domestic manufacturing, but at the same time, you have big targets to meet. But unless you are coming up with these tariff and non-tariff barriers, you are not able to kind of give that push for your own domestic manufacturing. But then that's coming at a big cost of not deploying enough RE capacity. So I think it has to be a mix, a very balanced approach of while government could have come up with other mechanisms of providing more capital for setting up these capacities rather than coming up with these tariff and other barriers. So, but thankfully, the government has agreed for ALMM to be applicable only for government sponsored schemes or where people want to avail government subsidies, but for other projects through open access or for captive consumption they are allowed to not necessarily be part of the ALMM. So yeah, hopefully it will give now good signals and more projects will be deployed.
Right. And then that the manufacturing then speaks to your point you were making about the supply chain,
Yeah.
right? Because it's these linkages, like where do you source, where do you process, and then like kind of. So let's talk a little bit about the critical mineral stuff that we were chatting offline before. So I heard that you're starting some work on India, Australia, and critical mineral. I don't know if it is at a stage where you can share something, but like curious on your thoughts on like how you're thinking or conceptualizing that.
Yeah, I don't have the results, but we started looking at India import export strategy sourcing. We wanted to kind of look at what minerals is India importing and to what extent it's exporting. Because, and honestly, we have seen a lot of discrepancies in the data. So we are trying to address some of the data discrepancy at this stage to get some breakthrough in terms of our analysis on, because in a particular year we did see the volumes not increasing to that extent, but the value has gone up tremendously. And we are trying to look at from the pricing bit. We are trying to understand through different exchanges, what the pricing for these materials are, and then trying to understand why there's such a big change in the value of critical mineral sourcing for India, what led to those price disruption. So I think that's where we are at this stage. And after that, we plan to help the Indian policymaker and the government in terms of its sourcing strategy based on the historical data that we have analyzed, and based on what developments are happening in other countries as well. Because this is again, everybody wants to shift from China-led reliance on other countries coming up with their supply chains, and how cooperation between different countries can play a big role. India has already signed some partnership with Australia and US and other countries. And that's where we want to analyze where the bottlenecks are for the bilateral cooperation between different countries, on the technology side, on the patenting side, on the financing side. I think while nobody is talking about investments in the critical mineral supply chain, we feel that this could again be a big bottleneck. And we want to analyze and address some of the financing gap even in the critical mineral supply chain now.
Right. One other thing I wanted to understand, we talked a lot about RE and kind of the India story, but what is Vibhuti now working on beyond critical minerals? What are some of the key topics that, is at the top of your mind?
Carbon pricing to help push Indian carbon market. What are the right carbon prices that we see? So we want to do a simulation exercise. We thought we'll start with few sectors, but I think for the entire carbon market, I think it will be important for us to include all the sectors and see what kind of price signal are required, which not act as a deterrent, because we can't afford to have like even the way the Europe has such high carbon prices, the markets are responding really well. But in China and US, we are seeing that they are in a range which is more acceptable. So we want to run that exercise for India to kind of understand the carbon pricing in India. So I think that's the big thing we want to undertake at IFA. And then looking at the EVs, while it's an overcrowded space, a lot of CSOs are already working a lot, but we again want to look at from the investment perspective. So that would be our differentiator in terms of what's the investment so far in the various segments, and where the gaps are, what kind of again instruments the players can look at for attracting more and more capital.
Well, excellent. And I know you have a hard stop, so I think that I can end with that. I think that's a good time, and it was really great conversation. Thank you for kind of both starting out with explaining the geopolitics of things in 2024 to look out for, but also really doubling down on the very India story of
Yeah.
states versus center, producers versus deployers, finance, and then we also talked quite a bit about policy and stuff. So thank you. Really appreciate your time.
Thank you for having me here. And it's always lovely speaking with you, Sandeep. We
Yes.
started our conversations uh, on just transition, but while that's also one of the important thing when we are talking about the energy transition, and especially in the global south. But yeah, the kind of targets that we have and the kind of geopolitics, especially in the last 2 years, is playing havoc on the achievement of some of these targets. So there is some kind of backtracking happening. So I think it's important to discuss about this in a platform like yours. So thank you for giving me this opportunity to share my views with you.
Excellent. Wonderful.
Thank you for listening to the India Energy Hour. Subscribe to this channel to never miss an update. To drop us a feedback, visit our website or write to us at theindiaenergyhour@gmail.com. We are on Twitter. You can follow at TIEH_podcast and get in touch with the two hosts at Shreya_J and at Sandeep Pai.